So without further ado, I'm going to throw it over to the great Charles Funk and the great Rob Gray, and throw it over to you guys and take it away.
Very presumptuous, but thank you, Matt and Drew. We're looking forward to giving you an introduction for the next sort of half an hour to 40 minutes on Heliostar, but we will make sure that we leave plenty of time at the end to take questions and discuss anything that we haven't, explained to the right level of detail or broad questions. For investors who aren't aware of Heliostar, we're a new company made up of very experienced people. Our collective background, in fact, a little bit of the background narrative is I myself am a geologist who worked for mid-tier and major copper and gold companies, mostly for the first 10 years out of Australia, and then for the last 5 or 6 years in Vancouver, probably Newcrest, most notable out of those organisations. And having spent time with big companies and understanding what it takes to move the needle for big organisations, and then going to the other end, the far more entrepreneurial end of the spectrum, we wanted to create a company that in the long term will actually become a sort of $1 to $5 billion producer, have multiple assets, and do that through finding projects that we think have really above average chances of becoming high margin producers. And so that's a sort of a lofty goal to have as a management team, and you have to start that somewhere. And we started that with a private company called Heliodor a couple of years ago. And we started by putting a portfolio of projects together in Mexico, which we'll talk about in this presentation. But we went out looking for an advanced gold asset to really accelerate our development as a company. And in 2019, we looked at a number of opportunities. But it wasn't until early last year when we got started talking to Red Star for their Unga project that you can see in the background of this photo, that Heliostar really came together. Red Star acquired our private co in almost a reverse takeover. And then we built Heliostar from that. And I'll run you through a little bit of the team building and the structure that comes with that, and then move to the assets because they're the real feature of Heliostar. You can find this presentation on our website, including the cautionary statement. And so we think that the investment advantage that Heliostar has is that we think we're going to significantly re-rate based on the back of some of the most high probability, high grade targets that I think you'll have been presented recently. We think we have a clear pathway to 1 million ounces of high grade gold, and we think that's just the start, particularly at Unga. We've put together a very strong management team and board who's done this before. We'll spend a bit more time on the assets, but we start with 384,000 ounces of nearly half-ounce material at Unga, and I'll attempt to convince you that that's wide open to expand. We have a very tight share structure, and we're in a strong financial position as well. As part of building the new company, I think we've put together a board that is very strong for a company our size. I like to break it down into 3 groups. If you think on the financial side, we have Jacques Vinecourt and George Island, who bring an extensive depth of investment banking and institutional finance experience. Technically, myself, Alan Wilson and Ken Booth, I think we understand geologically how these systems work. We've been fortunate enough to be involved in discoveries in these kind of systems in the past. And there's also quite a significant amount of commercial acumen. We're not just geos who love rocks for the sake of it. We are here to build a business that makes a return on investment. And then lastly, William Lamb comes with a really strong experience as an operator, probably most notably as the CEO of Lucara Diamonds, taking it from feasibility to steady state operation backed by Lucas Lundin. And so as we want to take our Unga project in Alaska through from resource into permitting into production, we have a board that knows how to do those steps. And I think that's not particularly common for companies our size. Then after the merger in August last year, we had to build a management team. And so Sam Anderson joined us from 17 years at Newmont with a lot of advanced exploration experience. We put on a new CFO, new exploration manager, a new corporate manager. And then very significantly, Rob Gray joined us, who's on this call as well, early this year. Rob, as Matt mentioned, you'll likely know from his time with Bryce Roxburgh and Yale Simpson, with Exeter and Explorer. They've seen the business cycles. In fact, Bryce was my introduction to Jacques Vaillancourt at Red Star. So history doesn't repeat, but it certainly rhymes. Rob's been very valuable in terms of, we've got that tight structure and we're a new company in starting to introduce people to the opportunity that is Heliostar. We think we've got an excellent next 12 months to 2 to 5 years in front of us, but unless we can get that message out, there's no point having that level of excitement. So Rob's been a very important addition to the team. If you look at our corporate structure in a little more detail, I mentioned the 32 million shares on issue. There's no warrants other than the broker warrants from last year's financing. So only 34 million shares fully diluted, which is a very tight structure, which will provide a lot of torque to any exploration success. And when you break that down a little further, board and management, particularly myself and Jacques, own over 1/5 of the company. So very strong insider alignment. You know, we want to make this a success. This is our vehicle to build our reputations and our wealth with. And so you can have a very high level of confidence in an investor that we are aligned with you in the goals for Heliostar. Then another 20% of the company is owned by high net worth individuals, you know, most notably Eric Sprott, but also John Tognetti and a number of other names. Heliodor was the private company that I referenced earlier, and that was about 15 high net worth investors. So that makes up another 20% block. We raised $7 million at $1.20 a share. It was 8 cents Red Star price, but $1.20 for Heliostar. In August last year, we were fortunate with the timing. It was a very strong market. So it was a well-supported financing that brought in institutions like K2, Crescat, Phoenix 2000, and a number of other funds. And then the rest of the company is the ongoing Red Star shareholders. And so it effectively means that less than 50% of our shares are free trading on any given day, with the blessing or the curse that comes with that. But lately we've put more of a focus, or we've really focused on increasing the liquidity, and we've listed on the QX exchange in the middle of February to make it easier for investors like yourselves to trade our shares. And that's starting to see an improvement in liquidity. We're consistently in the 50 to 150,000 shares a day range.
And Charles, real quick, who led that financing?
It was a non-brokered financing to fit all the high net worth investors in. It went to a group of Hayward, Sprott, Toronto, Sprott, San Diego, probably took the most from the brokerage side.
Okay, great.
And we picked up our first coverage in December from Michael Gray at Argentus. Michael's a very well-respected analyst. And so I think that was a real sign of the potential that we have, that Michael initiated coverage.
And the big thing, sorry, Charles, the big thing about Michael is he's ex-Macquarie. He ran their research for mining in North America. So that's one of the things. Argentus is a smaller firm that's starting to get noticed here in Canada. So he's really well respected.
Where are they based, Rob?
Vancouver, Toronto. Okay. They're growing. It's basically the ex-Macquarie guys out of Canada, and they're just growing, and that's how it started. But you can go back and look at his research from the Macquarie days. It's pretty solid. He actually was one of the people in ex-Tory that wrote up the company.
Okay, awesome.
I think he called Skeena quite early last year as well. So
he did.
Yeah, very, very good reputation in our corner of the world. And so all that's kind of a long-winded way of saying we've spent the end of last year and the beginning of this year getting our house in order. You know, we built the new management team. We cleaned up the structure. We got 3,200 meters of drilling done, the financing to build the new Heliostar. And so all that was with an attempt to now move the focus to our portfolio, because we think we have a really spectacular portfolio. And that starts with our flagship project, the Unga asset in Alaska. I mentioned before that it's the 384,000 ounces of extremely high grade and 13.8 grams per tonne gold. We own it 100%, so there's no big back-end option payments or any deal like that. It's in the Aleutian Islands in Alaska. And so when everyone thinks of Alaska, they think of cold, frozen, short field seasons. But being down halfway down the peninsula comes with some significant advantages. It is remote in that it's a long way away in Alaska, but it's surprisingly accessible as a first point. There's daily commercial or charter flights from Anchorage. You can see the airstrip at Sand Point that was extended in the 90s. There's also regular barge services from either Homer, Alaska or Seattle in Washington. In fact, quite a few people in Sand Point shop in Costco in Seattle and get it sent across every week. And that how far south it is in Alaska comes with a significant advantage for us in that we have a very long field season due to the temperate nature. It's not cold and frozen like most people are familiar with. And so we were drilling until the last week of November last year before Thanksgiving, and we'll remobilize the site at the end of this month, this year. So we have a 9-month field season, which is an incredible advantage. And then for other people who mightn't be familiar with investing in Alaska, you want to be associated with the native corps in Alaska. They're very sophisticated groups, and they make the process of partnerships and permitting a lot more simple. And so we have an 8-year exploration agreement with a built-in 20-year mine lease with the Aleut Corp, and good surface rights agreements. We just extended the Unga agreement for another 3 years. So we benefit from strong local relationships, which is critical. And then the last thing which might surprise people is that it was actually the site of Alaska's first underground gold mine. We'll talk about it as a target, but on the island of Unga, the town survived until the 60s, and the mine shut down in the 1920s. The post office was removed in the late 50s, and that led to the town finally becoming a ghost town as everyone moved to Sand Point in the early 60s. So there is a history of mining and a recognition of the economic contribution that it makes. And so this is looking a bit closer. The project is split on 2 islands, Unga Island to the west and Popov Island to the northeast. Geologically, it's an amazing district, and anyone who wants to listen, I will chew their ear off for hours and hours. There's so many interesting targets here. But we break it down as a first step. I'll talk a little more broadly on the next slide. But we have the corporate goal of defining 1 million high-grade ounces. And we think that's going to come in the very short term from the 4 areas you can see in the green boxes in this figure. The first is SH1 with the high-grade resource that is open. The second is the AQUILA discovery that's a part of a big district that's open on the same vein. The third is the old mine that I mentioned. I'll tell you why we're so excited about that, but the old timers defined the mineralization, showed you where it was and what the grade was, and no one had drilled underneath for 100 years. And then our fourth target is the Centennial non-compliant resource. So we think we have some of the highest probability targets, and to have this many that have open intersections on one property is quite unique. I won't spend a lot of time on this slide other than to talk about the overall endowment. You can see this 3-mile scale bar there. It's a big district with porphyry targets, bulk tonnage gold targets, and these high-grade veins. We mentioned the 4 highest priority targets, but there's there's dozens and dozens of vein outcrops, porphyry targets, disseminated gold targets that sit across the property that have seen next to no exploration. So our first goal is to define the 1 million ounces and get the re-rating that will come with that. And then our second goal is to bring up all these targets this year and next year and bring all these exploration opportunities behind that. Because ultimately we think this is a very big district. It's going to compare with some of the biggest vein districts in the world. And so that's why we think, let's get to 1 million ounces of first step, and then see whether it could become 2, 3, 4, 5 beyond that. But we need to walk before we can run, but it's a big district. And so I'll just touch briefly to give you a little more color on why we're so optimistic about these targets and the opportunity. And the first of these starts with the SH1 resource. You can see it on the inset here on the Shumigan vein. This is a long section looking to the north, and it tells a pretty important story. You can see in the core area here, there is a well-drilled part of the resource that has holes in it like 17 meters at 24 grams. So amazing grades at amazing widths, very close to surface. You can see the road tracking along above it. What we noticed when we reviewed this last year, though, was once you get outside of this area, the drill spacing is very coarse. And so we recognized 3 opportunities. The first is that there was no drilling in the top 100 meters. So we completed 7 holes last year. And over the last, I think 4 to 6 weeks, we've put out those results. And you can see we returned, holes like 4.4 meters at 5 grams, 11.6 meters at 7.7 grams, 2 meters at 18.6 grams, another 7 meters at 6.6 grams. So excellent results in that drilling. Although it is worth noting that there are still misses. It's the nature of these veins that not every hole hits high-grade mineralization. You can have misses in the middle of an ore shoot. And so that's why we're interested in these areas that have been only coarsely drilled. When we look at the geological model, there's still a really robust vein there, but they haven't returned the same high-grade results. One of the reasons we think that might be is demonstrated very clearly on this cross-section. You can see the hole 3 that we put out, the 7 meters at 6.7 grams in the gap, big gap below surface. But if you look a bit further down, there was a hole drilled a couple of years ago that drilled 16 meters at 28 grams, an amazing intercept. But there was another hole drilled in exactly the same location that, forget the width because it's a bad angle, but only returned 2 grams. And that's because there's coarse grain gold in this system. So sometimes a vein hits, sometimes a drill hole, the coarse grain gold goes in the assay bag and returns the really high hit, and sometimes it returns lower hits. And so when we look at these gaps in this deep drilling, 300-meter gap between hole 19 and last year's hole 9 and some of these other holes, we need to do systematic infill drilling, and we think that we can expand this resource. When you think that the deepest hole is 5.5 meters at 24 grams, this system is wide open to expand. And so by doing the infill drilling and the step down drilling this year, we are targeting to increase the SH1 resource into the 0.5 to 1 million ounce range. And if you just had that, that would be fantastic. But what separates Unga is how many of these high probability drill targets exist. So first of all, we'll be drilling under really high grade hits under SH1. Then on our next target, called AQUILA, we've gone 6 kilometers down the Shumigan vein. There's targets in between, but the reason that we came here is in the 80s, a big broad zone over nearly a kilometer with really high rock chips at surface, 10 grams, 6, 7, 11, a couple of ounce hits over here in the eastern side, over a big footprint. But when they went to drill that in the early 80s, they got really poor drill core recovery. And so they knew they had a good system, but even in the vein zone, I think in the hole that we followed up, they got less than 10% drill core recovery. And surprisingly, no one had ever followed up on those results from that day until we drilled last year. Some of the reason for that is from the early 90s into the late 2000s, it got lost in an oil and gas company. Sorry, that's correct, into an oil and gas company. And then it got picked up as a part of a portfolio of full metal minerals projects. And then Red Star joint ventured it, but were focused in Ontario. So by the time they turned their attention here, their capital structure had sort of got away from them for a bit, but they did do some good work at SH1 in 2016 and 17. But all of a sudden, you've lost 40 years of time frame for people to follow up on some pretty spectacular targets.
Charles, who was doing the drilling in the 80s?
In this area, it was UNC Teton and then Battle Mountain. You know, Battle Mountain probably did the best work and probably had the best pedigree from a history
Okay.
perspective.
Okay. And so the delivery on that was, again, just going back to what you were explaining, was a little bit, you know, complicated by the O&G industry, or I'm just trying to get the connection in terms of where things went mothballed to where things kind of picked up again in the 90s and bridging that gap.
Yeah, so in the 80s, there was a bit more of a complication in that, you know, Battle Mountain had most of the regional ground, but they didn't have Shumigan, and they didn't have Apollo. So there was 3 different groups who had the 3 different targets that we are focusing on. So it never had critical mass from that perspective.
Got it.
Then, yes, it did get lost from the early 90s until the late 2000s. And that was a period that a company called Doherty Resources that became Hunter Magnum had it and didn't see any significant work at all through that period. So there's almost 2 decades just completely lost.
Yeah, wow, that's amazing.
It's a huge opportunity for us.
Yeah, absolutely.
And to sort of reinforce that opportunity, you know, we drilled roughly in the area where we thought that old hole was because it was done on a local grid, so we couldn't be highly confident. We were expecting the worst, but we got good drill core recovery. There's definitely these clay zones in it, but modern muds and wider diameter drill bits have helped us. And so we announced last week that we hit 2 veins in the first hole. We drilled a broad zone of 31.6 meters at 1.8 grams, only about 30 meters below surface. And within that, 3.6 at 4.5 and another 5.7 at 5.5. So 2 very good hits for the first hole in basically a new prospect. And the thing that has us very excited is these 2 veins should join immediately to the east. And that's a classic spot for an ore shoot to form. We think we might have drilled into it with these holes, and we've just got to expand on that in the coming program. So we think there's 2 ways to win at AQUILA. You could either have a bulk open pittable target, or the geological model suggests these should coalesce into a single vein deeper, and you might have a classic vein like happens at Shumigan or Apollo. So we think we're on the top of an ore shoot. We've just got to come back and step out and see how big it could be at AQUILA. The third of our targets brings you back to a bit of the history that I talked about before. This is the old Apollo mine. You can see it in its heyday here on the right. The stamp mill, the train tracks, the old stope. They mined that to surface and the roof collapsed. So today you can see exactly where the old workings were. They produced 130,000 ounces of gold at about 10 grams per tonne. So it was very profitable in its day. But they ran into a problem that's best shown on this slide. They didn't understand about a deposit type that's called intermediate sulfidation. And all that means is the vein starts gold rich at the surface and then becomes gold silver based metals at depth. And so their problem is an amazing chance for us. You can see here, this is where they mined out in the Apollo 1 area, the high grade mineralization. But as they started getting down towards sea level, they started hitting lead, zinc, copper in the mineralization. And they called that complex ore because with stamp mills, they couldn't recover that. Today, or even by the 30s, we found a report that today with modern metallurgy, it's extremely straightforward. In fact, there's an old report that shows they got penalized for zinc in their concentrate. That's how much the wheels turned in 100 years. But what they did do was they went looking for more of the material that they could mine. So they sunk these shafts, shaft 1, shaft 2, and the Sitka shaft, and drove these exploration declines along. And so what they did was block out these zones of mineralization. You see 20 feet wide under Apollo 1, 100,000 tons over 400 feet of 8 to 12 feet wide in the shaft 2 area, another 40,000 tons at Sitka. And they went one step further. They estimated that would have 3 grams gold, 250 grams silver, and 10% combined lead zinc. That's 8 to 10 grams gold equivalent today. And no one drilled under the mine from that day until we did last year. We only just started, and we announced this on Monday.
Sorry, Charles, what year was that?
So the main Apollo shut down at the beginning of the First World War, and Sitka shut down in the early 20s. That's the two sort of talking for the mines.
Got it. Right, thanks.
And so what I kind of describe this cartoon as a cartoon from the 90s on a report in the 40s on a mine in the 20s. It was always a little rubbery on exactly where it was, but we could locate the entrances and the shafts to register it from that perspective. And so we got 3 holes drilled under the Apollo mine area and 4 holes into the Sitka area in the program last year. And so the first hole at Apollo hit the workings. The second got caught in the structure and deviated. But in the third one, we hit 2 veins. We hit 1.95 meters at 5 grams gold equivalent. And interestingly, we really appreciated 2 features. One is that there's parallel veins. And the second is that there's these broad, medium grade zones, 11 meters at a gram, a bit lower grade, the 20 meters at 0.45. That really open our eyes to the economic potential. If we have multiple parallel veins that carry high grade and big stockwork zones in between, that could be very significant economically. Up at Apollo, we hit the workings in hole 4 that we have results from, but we still got 25 meters at a gram gold equivalent outboard of that. And so we now know on this long section, we know where the vein is. We're the first group to confidently say we know where the vein is underneath. We know that a lot of development was done to block out the ore on 3 sides and estimate the grade. So we're just going to come back this year and systematically step out on our drilling and come into the shaft 2 area. And we think we have another 0.5 to 1 million ounces just sitting here underneath the old workings that we'll look to understand and define this year. So extremely high probability drilling.
Charles, we have a question. Is there any reason to think the metallurgy would change at depth to Apollo? I'm assuming it's Apollo.
The metallurgy will ultimately become more base metal rich, and then will lose its precious metal content. Gold rich, gold silver base metals, and then just base metals at depth. That's a very common zonation around the world. In terms of the ability to recover that, very straightforward. There's some network done in the 80s suggesting that should be pretty straightforward. And there would be 50 to 100 mines around the world that profitably exploit this kind of veining. Huge opportunity for the old time, a huge problem for the old timers, but a big opportunity for us.
Thanks.
And then the 4th of our targets, this time we're over on Popov Island. It's road accessible from the town of Sandpoint. Battle Mountain defined 200,000 ounces at 1.3 grams. This time, geologically a variation. Instead of the gold all being in a vein, it's come up and gone into a flat-lying porous unit. And so it sits at surface with a near 0 strip ratio. It's got very good metallurgy from a heap leach scenario, over 90% recovery. And one of the things that's caught our eye is there's holes in it like 4.6 meters at 5 grams that are supported by an old geophysics survey done in 2011 that suggests that the feeder zone actually is a linear feature running through here. And so we're going to go back and do some drilling to target that. And we think we might be able to add some high-grade material to Centennial. And so that's why we have such confidence in our 1 million ounce target, in that our 4 targets are an open high-grade resource, a stalled discovery, the old mine where they blocked out the ore, and a non-compliant resource. I've suggested to a few people that if you can find 4 targets as good as that on a project in another company, you probably should invest in it. It's rare, and it's amazing probability to be coming back and focusing on.
And it's in the USA.
Exactly, Rob. Yeah, if you can find it in the US, let me know about it. So we had good success this year at SH1 AQUILA, and now we can add Apollo to that with this week's news release. And so we want to build on that by going back this year with a two-phase program. Phase one is fully funded. It's 2 RC drill rigs and a diamond rig with a focus on SH1, AQUILA and Apollo, and then working up those background targets. But then realistically, the district needs all the other targets worked up and tested in what would be about a 20,000 metre program. So we're just going to wait and see the results from our phase one program with a view of rolling that into a larger program throughout the year.
Can you remind everybody the drilling season again, Charles?
So we'll be drilling either the last week of March or early in April is the current plan. We're mobilising in March, and so we can continue on till the end of November. So we can effectively have year-round news flow, Rob.
Yeah. Could we work there if we really wanted to, sort of after American Thanksgiving throughout the whole year, or could you mine there the whole year? How do you see that going in the future as we grow the resource?
Yeah, very simply, as soon as we get consistent work, we could be year-round once we build the infrastructure that goes with that. So the only reason we do it is just to be most efficient in our field season, but we could very quickly become a year-round operation, and any mining would definitely be year-round.
Thanks.
And I'll quickly introduce our Mexican projects. You know, when you're a company at the exploration resource stage, particularly when you're in Alaska and Canada, there's a seasonality aspect that people will often sell you over the winter and buy you in the spring. And so the 9-month field season that we have offsets that significantly, but also our portfolio of projects in Mexico help notably as well.
Hey, Charles, before we dive into Mexico real quick, we had a couple more questions from the audience with regards to, you know, Unga and what have you. So one is from Rob again in the audience. What is the monthly G&A burn rate and planned CapEx for the balance of the year on this project? And I would follow up on that, you know, looking, and I know you're going to dive into Mexico here, but in looking at that burn and CapEx as it pertains to, you know, Unga vis-a-vis Mexico, and then your project in Red Lake as well, what is kind of the division there in terms, or delineation, I should say, in terms of the allocation?
Yeah, that's a good question. The first thing to go back to some news from December is we sold our minority stake in the project in Ontario. We sold it for $700,000 in cash and $1 million worth of shares. So we retain some interest through a shareholding, but we don't have any burn rate there. We're no longer a minority owner of the Newman Todd project. We think that we would like to focus on our portfolio. So our plans for this year is we have 600,000 Canadian planned for our Mexican exploration that's underway. Then we have approximately 4 million Canadian planned for our Unga project in the phase one program. So they are the two fully funded aspects that I talk about that'll take us into the third quarter of this year and produce a lot of news catalyst in the meantime. Our G&A is approximately 1 million US, about 1.3 million Canadian. So we keep our G&A pretty tight. We want to get our money into the ground where it's going to have the biggest return on investment. So we have built a management team, so it's larger than Red Star had before. But no, we're not a lavish C-suite. We're quite conservative with that side of the spending. So you'll see $600,000 go into Mexico over February and March, and then we'll be back up at Unga from end of March through the rest of the year, and the focus will be back on Unga. So that's the distribution of the money that we have in our treasury at the moment.
Okay. And then we've got another one from the audience, old friend Mark Andrews, that Rob knows very well. You said drilling intersected the target veins 19 of 23 holes. Were the other 4 holes dead or just weren't successful?
Dead?
Was there still mineralization or no?
That's a
great question.
I would be very happy if I could hit 19 out of 23 holes every time. We hit on 9 out of 9 holes at SH1. We hit on 4 out of 5 holes at AQUILA. The reason we missed on 1 hole there is we believed the vein had a certain orientation, and we found out that it had a different orientation. So our second hole didn't intersect, but then our third, fourth, and fifth holes did intersect. So we had one miss there. Then a hole at Apollo and a hole a hole at Sitka. I think 2 holes at Sitka hit workings, so we didn't include those. So we were right in location, wrong in the vertical range. And then our last one was at Empire Ridge, where we didn't hit the target. We think there's some faulting there, so we have to come back and look at that next year.
What a great question from Mark Andrews. So we appreciate that, Mark.
Thanks, Mark.
So yeah, let's dive into Mexico.
And so our Mexican projects, as I said, provide that nice counterbalance from a news flow perspective, but it's also, a real hotspot, this part of the world. I'm sure a number of people listening in will be familiar with First Majestic, Silvercrest, Equinox, or maybe even more recently, Silver Tiger. This has always been copper country, just south of Arizona, and it's always been tied up by copper majors. But in the last 10 years, the gold and silver endowment is really starting to be recognized. Now, there's 2 operating mines. There's one, Las Chispas is going into production. Santa Gertrudis is an advanced development project for Agnico. It's an area that's really being recognized for having significant potential for more discoveries. I was fortunate enough to be involved in the Ermitaño discovery immediately east of Santa Elena, which will go into production at the end of this year. And then I was also the VP of exploration for Vizsla last year in Sinaloa, and we had incredible success in a vein system. I've since moved on to the board of Vizsla with my focus here on Heliostar. I think probably personally, I've visited 50 projects in that map window in the last 5 years. We know this part of the world extremely well. And so we acquired 3 projects, the first of which is La Lola. It's a 6 by 6 kilometre district that's got significant alteration and outcropping veins. In one spot, as you can see on the photo in the top right, the vein gets up to 40 metres wide and was actually mined for fluorite. Our interpretation is that you're too shallow in the system from where you would get the high-grade gold. We sampled at surface and we get the odd erratic bit of high grade, up to 58 grams gold and 424 grams silver. That convinces us the system is capable of producing it. But our geological model is that we have to drill deeper under the vein and see if the system evolves into that sweet spot where ore bodies form. And so we just started 1,500 meters of drilling at La Lola, and you'll see a press release announcing that very shortly. Then our second project is Oso Negro. We acquired this last year because it has 3 major veins. There's some more that we've found, but 3 major veins, each over 500 meters long, that have spectacular grades on surface, between 200 and 2.5 kilos silver, and between sort of 1 to 10 grams gold, with the odd, really flyer result. And so these veins have got little workings, down 15, 20 meters on them in a number of spots, but have never been drilled. And so we're just doing the systematic sampling and the detailed mapping that's required to finalize our drill targeting. And that program started last week at Oso Negro. And then the third one is a little interesting. We acquired the Kumaro project last year, trying to put the Picacho district together. As you see in this presentation, we like to acquire big districts because you want big districts to find big deposits. And we like to own all of them. Unfortunately, we were a little private company last year, and when we bid for the rest of the block, we were comprehensively outbid by Silvercrest for the rest of the tenure. And so the downside is that we don't own the whole district. The upside is that we have a key part of this district where Silvercrest announced last week some considerably good drill results. I think their best hole was 7 meters true width at 40 grams gold up here on Picacho. And they currently have 3 drill rigs active on their claim block, which is in red. And the reason the district is so interesting is it's a district in 2 halves. To the west of this green fault is outcropping quartz veins. I mentioned the grades that have come particularly from the Picacho area, and Yamana drilled that extensively right up to the property boundary where those veins continue onto our ground. Whereas the east is a downthrown block, and all that means is the mineralized horizon is preserved at a deeper level. And instead of veins, you see these pixels representing clay intensity. And so we think we have a really prospective part of the block. And because it's had next to no work ever done on it, we're just doing the basic mapping and sampling to understand it, to decide commercially what are the logical next best steps. But Silvercrest is certainly being very aggressive here as we speak. And so we've demonstrated very strong news flow over the last 6 weeks. We will continue to do that going forward this year. We think we have spectacular assets with some really high probability, high grade targets. Our first target is to get to 1 million ounces. And I think we have the team that has the track record, both in capital markets and with discoveries, that can achieve it. So I think Heliostar is really well positioned to have a really exciting 2021.
Thanks, Charles.
Great job, Charles. Couple of questions for you. In terms of going back to Unga, what is the situation there? And it's just unusual to me because I've been in the business for a long time and have dealt with a lot of, Alaskan assets and companies, what have you, but the Aleutians, this is a first. And what is there a situation with you guys regarding the First Nations there, or what's that kind of relationship like? If you could explain that.
Yeah, so we touched on it a little before, but in a little more detail. There's most of Alaska is split up. If there's old existing claims like AQUILA, that is a federal patented claim, and we own that completely. SH1 is on state claims that, again, we have the mineral rights and the surface access rights subject to a 3% net interest royalty with the state. And then the rest of the ground is owned by the native corporations. And so the native corporations in Alaska own the majority of the mineral rights. I think that was done in the late 70s, early 80s. And generally speaking, they're very pro-development. So they're very good partners to have if you want to develop mineral assets. And so I touched on the agreement we have with the Aleut Corp, which is the 8-year exploration agreement and built-in 20-year mine lease. So, we're very proud of that relationship, and we think that it's going to be a very mutually beneficial relationship for both groups. Then the surface access is split on Unga Island, and excuse me, I roll through some slides here, is split on Unga Island is the Unga Corporation, and on Popov Island is the Shumigan Corporation. And so we're fortunate to have good relationships with both groups. There's 49, if I have it right, members of the Unga in the world, half of which live in Sandpoint and the rest throughout the United States. We've just extended our access agreement with the Unga for 3 years, and then we have rolling 1-year agreements with the Shumigan Corp.
Okay. So
this is Sandpoint is a hardcore fishing town. There's a fishing cannery, and they live or die by the success of their cod and crab seasons. And sadly, that's been getting a bit tough in the last few years. So we've got to do all the right things as a partner, but there is an appetite for economic diversity here.
Why is that, though, on the former comment about
the fishing
being tough on the fishing industry?
Talking to people in Sandpoint, it seems to have more to do with competition and restrictions in areas that people are allowed to fish.
Okay.
I think this area was famous particularly for its cod, but the restrictions and the competition have made it very difficult for people to catch limits that allow them to survive and to thrive.
Interesting. Okay. Another quick question on Unga as well, in terms of, and you touched on infrastructure and the port and what have you, what are we looking at in terms of water and power over there? Is that an issue, or is that because we're looking at it again, redeveloped situation here, and I'm just looking at kind of what's the grid like?
So very, very clearly we are off the grid. There is a road network between SH1, Apollo, and AQUILA because it was occupied until the 60s. In fact, there is still one person living on the island in an old cannery.
Okay.
Yeah, It's got modern history.
Population
the
one. Right?
There's one permanent resident in Unga.
I like that.
It's from our perspective, we would run, in all likelihood, and this is getting well ahead of ourselves, but we would run a diesel operation like happens very commonly for a lot of gold projects. The advantage of being small tonnage, high grade is that it doesn't take a lot of power to produce a significant amount of gold. There is also the possibility that you could direct ship this to Japan or Korea. You're very close.
Okay.
So either or is a possibility. So from an infrastructure perspective, you're at tidewater, there's a road network. It's not going to be an extremely difficult or costly event to build a mine here in Unga.
So another question from our buddy Mark. What is how large is Sand Point? And I think you just touched on this in terms of population, and population would be what in Sand Point?
Yeah, Sand Point, I think it's between about 800 and 1,000 permanent residents, and that swells to up to 4,000 during the summer when the fishing season's on. Got it.
And in terms of, looking at the property itself, if I missed it, I missed it, but the acquisition of the properties in Mexico as well as Unga here, how did that go through? And who was it through? And can you detail that a little bit more in terms of, what that looked like?
Yeah, happy to. So at the beginning of last year, we have a thesis that we want to do, acquire projects cheaply that have unvalued upside, because if you pay a lot of money for an asset, that comes straight off the margin. You're paying for that regardless. Whereas if you identify projects with exploration upside, then that is profit that is reserved for yourself. So we try to do asymmetric deals where the cost to acquire is cheap, but the upside is significant. And I think all of our properties meet that criteria. We acquired the 3 projects in Heliodor in the private company in Mexico. One came from Azure Minerals. They were focused on a more advanced asset. And the other 2 came from Evrim, a company that I used to work for. I always joke that beware the projects that you fall in love with. But Kumaro and La Lola came from Evrim. La Lola was staked when I was the VP of Exploration for Evrim. So that's how we acquired those projects. Red Star joint ventured into Unga, met the majority ownership terms, and then came to a subsequent agreement to acquire 100% from Full Metal Minerals. So, we're one of those rare companies that owns all of our projects 100%.
Fantastic. And you were formerly with Vizsla, correct?
With who, sorry?
Vizsla?
Correct. So, in the past, I was Oxiana, Oz Minerals, if anyone remembers the Australian copper company that still exists.
Which one?
And Newcrest. So mid-tier, multi-billion-dollar companies.
Yeah.
Then you could never move the needle unless you found things that were bigger than Ben-Hur. It was really hard to be successful in a business development setting. So wanted to be a little more entrepreneurial and moved to Canada. And I took a role as the VP of Exploration for Evrim. We had a good few years. We made a discovery that got us up to 150 million market cap, and sadly it didn't pan out, but had joint ventures with Newmont, Antofagasta, Coeur, a number of high-profile companies.
Yep.
And then I wanted to start what is now Heliostar. But the worst thing you can do for a startup company is put a salary on it, and it just destroys the capital structure in the early days. So I split my time between Heliodor and Vizsla as the VP of Exploration. And so Vizsla was incredibly successful last year. And in January, I transitioned to become a board member of Vizsla.
Fantastic. That's great stuff. And Newcrest, and correct me if I'm wrong, did they just last year, or maybe the year before, they acquired Imperial Metals, correct?
Correct. They finally pulled the trigger on Red Chris. In fact, my first visits to Alaska were with Newcrest. We had an alliance with a company called Millrock at the time.
Okay.
And so that was my first exposure to Alaska. I got to fly all around Alaska, visiting a whole number of projects and meet a whole number of people. And that was actually a good basis
Yeah.
that continue. It's when I first learnt of the Unga project. Our VP of Exploration, Sam Anderson, did BD for Newmont. I did BD for Newcrest. And at these valuations, we think you see a project like Unga once a decade. We think, without trying to get too promotional or too ahead of ourselves, we think an opportunity like this is lucky to come across, once every 10 years. It's rare.
The background's great. I mean, it's sensational. And at the end of the day, like, looking at something like this, we're looking at very undeveloped or just underexposed in terms of, looking at the Alaska asset right here, assets. And like I said, I had never even worked with a company over 20 years in doing this that had any interest in the Aleutians. And so it is really exciting stuff. And really, again, thank you guys for your time and your participation in the presentation. I know there's going to be more Q&A out there. There's a lot of shy people out there, but we'll still work on that. And we've got more of these. We've got this presentation recorded, which we will send out to more investors that Rob knows as well out there. And Rob's a great addition to your team for sure. And I think this is a very exciting story. I think it's a great group, and looking forward to working with you guys more. And again, out there to everyone who participated today, thank you for your time. This is a really, really good group. Really good group. And if you know Rob, and we're now getting to know Charles, I think this is a place where, the needle might go in the right direction for all of us. So in any event, thank you for your participation. Charles, the great Charles Funk, and Rob Gray, the great Rob Gray,